All right, wonderful to have everyone. Uh, Tonight, we're going to talk about the human emotions and the markets. And I start with the ecstasy of victory and the agony of defeat. And it defines just only me and each one of you individually. And that's what the markets do to us. So, what I thought it would be a good segment to learn how to deal with the emotions and how we can manage these emotions and the market's supremacy. So I'm sure you have felt like this. In a minute, you're like the person on the left in agony, and then another minute, you're in the person on the right. Or on the soccer field, again, the ecstasy of victory and agony of defeat. And markets sometimes they give us, it's not us, it's our positions. They dictate and sometimes they force us to show our emotions. And tonight what I like to do is how can we manage the, what markets have given us and how we can overcome some of these emotional feelings that we go inside. Again, from frustration to anger to uh, to again not knowing what is next. And these are the emotions are very natural emotions. On the other hand, when things are doing well, doing good, this is how we react. So either side is again, it's a reflection of our emotions, doesn't make it right or wrong. But what we have to do, again, we cannot control the markets, but we can control our reactions and manage who we are. Sometimes we look at the mirror and this is what we see, and that's what we can control. Do we want to keep calm and trade on, relaxed, and how we can do that? So one of the ways is you have to put these few phrases down because I think it's very important to understand that the markets really don't care how you feel. They don't care if you had a bad day or you had a good day, if your spouse or your loved ones are mad at you, and they don't care if you have to bills to pay. That's not their responsibility. Once you accept that and understand that it's a completely separate entity from you, I think life gets a little easier. Also, you have to accept that nobody, and I mean nobody, knows what will happen next. And that's also it's a blessing because what happens, this it gives us the equal playing field. So what we have to do, we have to learn to manage what we can do. Also, you have to understand the risk. Risk is not our enemy. Risk is just, again, it's a part of the game and we cannot fear it. It is, we have to accept it and we have to manage it. Once you learn to manage the risk, then trading or investing in any type of activity you do, it becomes more enjoyable. Also, you have to get comfortable being uncomfortable because this is the nature of the beast. This is how it is. And that's what it's such an exciting, but also such a rewarding career if you want to be an investor or being a trader. Last, what I think it's important to know that trading is not a logical business. You know, the more work you do, the hours that you sit in front of the computer, the all the research you do on weekends, the night before, that doesn't equate to more money. You can work for 5 minutes, make as much money as someone who makes the whole week. So that's what you have to also accept. So you cannot say, well, this is not fair because I did all this work and I'm actually losing money. And that's what, again, it makes this business completely different. So how we can manage our emotions, how we can actually counter what the market is doing to our positions. There are four ways, that the two major ones and two minor ones, that I think will help you. Number one, you have to establish a trading business plan. And you have to be very clear why you are in this business. Second, once you made your business plan, you approach it as a business, then you will have a trading plan. Once you learn about trading plan, part of the trading plan is the trade plan, which is the subset of trading plan. It's the strategy that you use. It is one trade or two trades. It is, again, it's a part of a big picture. The last but not least is the management of your plans, and that's through the trading journal, which I think is, I've repeatedly have said it before, it's very important. I thought this is interesting to understand. Again, it's more on the psychology side of things, but also again, I think it applies to any situation. The cycle of market, I put emojis, but it is our emotions. How we have the optimism and how we get excited, we get thrilled, then this euphoria, and that's what the markets go through collectively, and that's what happens. And I've used sentiment before. That's what happens to us in our. Could be a 30-minute trade, it could be a one-day trade, or it could be the whole year. These are the emotions we go through, and eventually, what happens? The complacency kicks in, and you can go back to 2000, 2001, or you can look at 2007. You can see how the complacency kicked in, and then the anxiety, the denial, fear, panic, anger, and then we give up, the depression, and then the cycle starts all over again. The hope, relief, optimism. So this is the cycle continues, and why this happens? Because we are human beings, because we have emotions, and I don't care how educated, how experienced you are. The civilizations have come and gone because of these emotions. Some of the most strongest civilizations have bit the dust because they could not control these emotions. So what do we mean by trading business plan? So I like to separate this from trading plan. This is the business plan because I want to have a clear mission. You have to approach this as a business if you like to be part of trading, and you have to separate it whether it's hobby or whether it is a real business. So you have to have a clear mission. I repeat this in every our classes. You have to know your why. Why we're doing this. Again, is this going to be a real business? Then you have to approach it as a business. You have to be serious about it. Or is this hobby? It's a part-time thing. Then you have to accept the shortcomings times, or you have to set your criteria based on that, or you can look at it as a part-time business. But please be clear on why you're doing this. The second thing is, and again, all of you know about me, is you have to know who you are. You have to know yourself. And that's, I think, it's the most important thing in not only in business, not only in the career, but also in relationships, is understanding who you are, because that dictates your future. And the more clarity you have about that, actually the easier your trading and your business planning and your investment planning becomes. And also it all dictates you what kind of an investor you will be, or what kind of a markets you have to be in. Are you analytical? Are you decisive? Are you patient? Are you organized? Are you disciplined? Are you lazy? I mean, you know, all kinds of criteria are there. And once you sit down and do an analysis of yourself, you look at what are your strengths, what are your weaknesses, then it allows you to find out where you exactly stand. But also you need to know what are your goals and objectives. If you want to be in the business of trading, you have to understand what are your financial goals, how much you're willing to invest in your business, and what is the outcome you're looking at. What is your personal goals? Because sometimes it's not all about money. We are in this business because there's a lot of other things that it this business gives us. It's it, it could be power, it could be redemption, it could be it, the good feel, it could be the accomplishment, the challenges. So not all the time is the financial, but financial becomes an outcome from our personal goal. Also, you have to know what you have. You have to do an inventory of your past and see what experience are you bringing to this business. What is your capital? Uh, what are some of the technical tools? What kind of computers you're using? What kind of a knowledge you have? Again, all of those you have to sit down and just have a clear picture what you're bringing to this business. And after you've done that, then you have to know what actions you have to take and what are the risks that you're willing to take, as well as, again, the paybacks, the sacrifices you have to do. Are you willing to do that? Again, it becomes emotional roller coaster. So how far will you go to accept that roller coaster? But also you have to know what is your stress level, how much family support you have. Believe it or not, this is like kind of a forgotten thing. Trading, not so much investing, which could be depending on the macro economy of the markets. It is a pretty lonely business because it's you and there is no hidden agenda. That's you and your trades. So sometimes when there's that stress, you really need your family support. Is your loved ones willing to allow you to give you that space to do what you need to do? And that plays a big role. So you have to have clarity about that. Once you've set up all these, you have done, again, your understanding of where you stand, then how far you like to go with this business. Is this going to be a real income producing residual income? Is it going to be a main income? At that time, you have to sit down and say, well, what kind of organizational structure do I want to have? Do I want to have an LLC? What do I need to do as far as tax planning goes? Because as a trader, if you are a full-time trader, obviously you do get a lot of benefits, and there are some tax advantages that it's not available for, let's say, part-time investors. So that's something you have to sit down and take seriously. And finally, not the last thing, but I think it is important thing that it is that how far you like to improve yourself. It's constantly, we are in an evolving world. And would you like to continue with education plans, whether it's reading books, doing webinars, or learning internally as far as just understanding yourself? So one separation is I mentioned about trading versus investing. And, again, I used to be an analyst, and but again, my passion is trading and investing. The separation is, and I think CNBC or Bloomberg, that would be a good um, criteria for you, is like trading is a mastery of self. And that's what is so difficult, but yet very rewarding. Analysis is a mastery of research. And that's why when analysts, when they come on TV, it's not about profit, believe it or not, it's about being right. So you have to separate that, knowing that when you're in the trade, nobody gives you an A or B or C. You are not on America Got Talent, or you're not on a game show or not at school. It's about what your goals and what were your goals and did you achieve them? Were you supposed, could have been a target? Were you profitable? That's all it is. As an analyst, again, it's all about being right because they want to be invited back. So they put a lot of pressure on trying to answer all the questions. So that's the separation you have to understand. So once we have our business plan, we do know where we stand, we approach it as a business. Now, what do we do? So the business is, the structure is ready. So what kind of a trading plan we have to approach this? And what do we mean by trading plan? basically trading plans is a set of rules that you want to set for yourself that you want to be disciplined enough to follow. And by following those set of rules, that's how you can achieve the goals that you had made for yourself based on your business plan, based on understanding who you are and what your objectives and what was your why. And by doing that, then we can go to the next step, which is your trading plan. Now, I emphasize this, as you can see, mastering yourself is true power. I use this quite a bit. Aristotle that said, knowing yourself is the beginning of all wisdom. It is so important. I mean, that's why I think it's important. And I really like a lot of people who do that mind body connection, the meditation. It could be 5 minutes, 10 minutes, especially when you wake up. You want to make sure you're totally up and you're ready to go and you're focused. So it could be end of the night or beginning of the day. I think that is so important, that connection. So what is building your trading plan? So what do we mean and as far as what subsets that building a good trading plan? I will go one by one as far as what we need to do to have a pretty good trading plan. Number one is the trading style. And what that means is, are you someone who like to be invest in or trade the trending markets, or do you like to do counter trading? And when I say counter trading is when there's like a range bound, we talk about channels. You like to, when there are extremes, you use Bollinger Bands, for instance, or linear regression. Do you more of a short term? You see when there's the extensions and the anomalies, that's when you get in, or you're comfortable, which especially in investing in happens. It's, are you more of a trend follower? And by understanding that, and it's interesting because most people say, oh, I'm a trend follower, but personalities, sometimes you are, maybe you're a rebel. You don't like the norms. You don't like the system, for instance. You like to be outside the box. You like to do things. So you become a counter trending person. So what investment or the trading tools can you use to be successful at that? So I use some examples, like for instance, for trending markets, which once they start, they continue till they stop, like gold, fixed income, like bonds, soybeans, and ags as a whole, but soybeans especially. Euro, Aussie dollar is very good. Big trend. On the other hand, like Swiss franc usually is not very trending. S&P and Dow Jones used to be not very trending, but like decade of 2010 and on, you can see like Nasdaq was very trending. S&P became trending, but in the midday, believe it or not, there's a lot of times you find like S&P is range bound. So maybe that's what you could use. You could use it as a future trader, maybe, or option player. Second thing is your time frame. Are you a short-term trader? How long are you going to stay in a trade? Basically, is it going to be seconds, minutes? Is it days? Is it months? Is it years? Once you have that clarity, then you can adapt and find out what markets, which is your third, will fit your agenda. Now, a, also, are you mentioned about, are you analytical? So whether you like analyzing equities, or you like the big picture, maybe you want to be in commodities or international investments because of the way you see the geopolitical pictures. You like, again, with the macro point of view, you like the currencies like forex, or you like you're detail oriented, you like the set rules, you like the numbers, again, and analysis. Your short term, but also intermediate term options play a great role because it gives you actually more control, and they are not, you know, there are not many varieties. And the same thing, let's say maybe you want to invest in futures and you like commodities, for instance, or the financials. So these are the things that you have to decide. What markets fit your personalities and you feel comfortable? I've added cryptocurrencies, penny stocks, real estate, which is really long term, fixed income. So it all depends what your personality fits in here. Now, now that you found out what style you're going to use, what time frame you want to use, what markets you want to be in, now what indicators are you going to use? For instance, for short term, you probably be more of a technical indicators. For long term, you're going to look at the big picture. You're going to do a lot of analysis and research and be a fundamental um, researcher and invest in a more of a long term. And I add a sentiment because maybe you look at the what the markets are doing, you look at the psychology and emotions, and you feel there's again anomaly, and this is a good time maybe as a whole get into the market. So these are the things that you have to again write down and see what indicators you will be using. The trading strategy is, or the trade plan is a subset of the um, trading plan, is actually understanding when you are going to enter and when you're going to exit. By doing that, it gives you the clarity because now you have set rules that you know that at this moment, based on technical analysis, based on maybe first hour of the day strategy that I used, maybe it was a gap play, maybe it was a moving averages. You know when you got in, and then based on that, you make your exits. So this is a subset of again that trading, but it is about entries and exits. Now that you are doing your investing or trading, the risk management is probably the most important thing. Risk management and money management, which they kind of interrelated, is to know that what when do I take my stop loss? When do I take what profit targets would I have? How long will I be in there? And what is my emotional tolerance? Do I just give up? Will I be in that for 30 minutes? And if nothing moves, will I get out? So that's very important to have that clearly written. And then I put on news and events because we are living in a world which is very much event driven nowadays, and we have no control over that. But how reactive are you to that? I mean, you go back in the history, a lot of big news, a lot of big events have happened. And within 3 days after that, you would look and say, nothing happened. My God, the markets have their own mind and they look beyond. They go 6 months, they're a discounting factor. But that moment, look how you react to that. And then the money management is more of a what are your targets for that day or that month or that week? How are you gonna look at as well as risk reward? Are you willing to risk $1 for $3 of reward or $2 of reward? What about the income? For instance, I have one of my accounts. When I take every month, I take my profits out on that account. That's more of an income resource. So what happens is it's already set. So do I look at this as an income? Do I take my profits because mentally I think, all right, let's say you have $100,000 account, you make $10,000 that month. Once the clock goes back to 100,000, you feel like, oh God, I gotta start all over again. But if that 100,000 becomes 200,000, do you become complacent? So these are the money management rules that you have to really be clear of what you want to do from the money management side of things. Also, I added like when you need to trade and when you need not to trade. How emotionally solid are you that day? Are you stressed? Are you tired physically? Do you have a lot of things, a lot of responsibilities coming on your shoulder? I used to have a rule that if I had 3 losses in a row, I'm done. Either I will go for a walk for an hour or two, or I would just take the day off because I felt I needed some kind of a change. So set those rules. Make sure you know when you need to trade. If you have the momentum, you want to do it, but make sure you have the set rules as far as your risk management. But if you're not on, it's almost like an actor or it's almost like a professional athlete. Just know your limits. And also know how long you're going to be in a trade or investments. Put some time limit. And if there's other opportunities, would you like to tie in your capital in this opportunity or are there better opportunities? So be clear about that. And Also know your risks. So let's say the way we are now, I put some general risks. Understand the big picture, the market risk. We talked about last week. We talked about how when the markets go down, when there's a selling in the markets, it actually takes 90 to 95%. I'm talking about equity markets with it. So understand the markets. Look at the sector risk. What sector of the markets you're playing? Is it in the commodities? Is it in like energy, or is it more into technology? So you have to be aware what is that subsector of the market, but the smaller picture, but still a big picture, what they're doing. Then you want to understand your operational risks. Have you managed it? How up to date your computers are, how fast your internet is, how connected you are. Are you on Wi-Fi? And then something happens, and the minute that you want to pull the trigger or whatever, it is unfortunately disconnected. Um, what kind of brokers do you have? Can you, if you had all these problems, let's say your computer and internet broke down, can you pick up the phone and get connected to your broker? I do have like to have multi-platforms just in case something goes wrong with one. I always want to have an out. I mean, we've had in the past, in the beginning of the year, if you recall, like Robinhood platforms, they had some difficulties. Schwab has had it. TD Ameritrade has had it. So you'd like to have multiple platforms. The last but not least is this strategy risk, and that's how you learn lessons based on the strategy that you use. What are the outcomes, and how valid are they, and what are the risks based on that? And if you can manage that, that's a learning lesson which comes, we will talk about it in trading journal. So why we are suggesting a trading plan is because, let's say if you have, and this happens is that again, a lot of human emotions, if you have FOMO, which is fear of missing out, oh my God, well, I can't believe you get angry and you start saying, how could I miss that? Look, it went against me. I could have made this much money. By having a set plan, it actually allows you to follow that plan and to know if that's the right thing to do or not. So you have a system, you have a trading plan, and this way you don't get emotional, and that kind of negates the FOMO or missing trades. If it's so, the fear of missing out again, you didn't get in. Missing trades is a similar thing because you're organized, the price alerts they come, and that's when you get in. Now, because if the missing trades are, oh, maybe you're driving when you're away from your desk. So these are the things that being organized allows you. I've mentioned it a lot that when like I put my trades in, my profit targets are already set in. I know if I'm going to be attending a soccer game or I'm going to be involved with something else, they are automatically made for me, so I don't have to watch it every second. The fear, being too scared, again, by having a system and following it, it allows you to build more confidence. And again, discipline comes from that confidence. You feel confident, you feel competent, and that's how your emotions are checked. Now, sometimes we break rules. In this case, because you do have the easy to follow plan, you don't, you become a professional and you don't break those rules. So that's also, it gives you the confidence again, knowing that, you become accountable, you become responsible. And then this is a big one. It happens, doesn't happen for investors, but happens quite often with traders, especially in futures trading. Now, flipping through time frames. What happens, let's say I got in based on a 5-minute indicator, and that was my setup, and now it's going against me, and all of a sudden my 5 minutes becomes 15 minutes setup or 30 minutes because I'm saying, oh, you know what? Oh, I'm looking at that 30 minutes. Oh, yeah, I see the moving averages are, converging. This is, yeah, I'm gonna with the, no, your setup is your setup. The sooner you can stick with your discipline and get out, the easier the life is. Remember, there's always another bus, another opportunity waiting for you. So cut your losses if it's against you. And if the profit is going, just use that. Don't flip, again, the time frames to justify your staying in that position. We talked about, again, the trading strategy is developing a strategy that allows you to know when to want to get in, buy or sell, depends on what position you want to take, and when you exit. And that's what it's called, the trading strategy. So again, it tells you, depending on the methodology that you use, when you want to be in, when the system that you want to use, do you want to invest or trade pre-holidays? Because they all have actually their own rules, believe it or not. We talk about Santa Claus rally, for instance. Now, do you want to play the during the major news and events, or you want to be out of the markets? It could be the Fed, the FOMC. It could be the jobs numbers coming out. So it is the time that maybe you should be away from that. Option expiration Fridays, are those days are good days to be in the market? How about the first hour? What about the gap plays? What about other technical indicators? What do you do pre-market? What do you do after market analysis? So these are all part of your plan, that kind of a narrow way of your trading plan. And you want to revisit this to make sure that you're refining it constantly. This is such an evolving business, in a sense that you learn every single day. After 35 years, I still am like a kid, not only because of the technology that we have and all the other things, but also because it just always something new. And I find more things about myself that I didn't know. But one good thing is I try to stick to my rules. I try to be calm, because I feel, again, I know I cannot go against the markets. Markets are always right. And I've accepted that. Every day that I wake up, I know it's a new game. I'm not looking at winning the championship a year from now. I'm looking at, what am I going to do today, and how am I going to play today? And it's like one game at a time. So our last part, I think it's important to understand how we can really know that we're doing the right thing. And I put down, written goals have higher chance of being achieved. And there's just so much truth to that. Because when we think, there was a study done that people who wrote down, and I really like to put it physically, because I like to have an emotional connection and physical connection with the pen and the paper. And it's just the neurons and the physical connection. It gives me more comfort. Even after all these years, I still have my journals from many, many years ago. I go back, look at them. I like to have that, physicality of writing. And there was a study done that 76% of people who actually wrote their goals, they actually achieved it, which was 33% of the people who did not write them down. And that's why it's important to have a trading journal. It's not just about putting your logs. There are 5 or 6 top services you can have. They do the trading journal for you. You can sit. They do have like everything else. Not so much is available. You can. They do the Excel sheet for you that you can fill out the logs. When did you buy? When did you sell? What positions. The most important thing to me is your trading journal is like your coach in a notebook. And the reason is, you want to write down the actual reasons before you get into to your trade. It is important to understand why you got in, but also what was your emotional position? What was your mindset at that time? How were you physically? And once you write that, you write down, again, the totality of who you were at that moment. I think things get a lot more clear. You want to understand, you want to know what strategy you used, and you want to stick with it. And it's funny, because it's liberating knowing that when you go back and you say, well, I bought this for this reason, that reason, and I'm going to exit it for this reason and that reason. Once you don't compromise, it it sticks, and it gives you that freedom to continue. Now, granted, for instance, if there's like really good earnings come out and the things have changed, well, then you modify it. But you do write down, you say, well, Apple is going to have for one, or Tesla has a split. How is it going to affect it? What is the earnings coming 2 months or a month? How you write down all those reasons so you're flexible because you've done your research, but please write them down. Don't feel that I'm too good for this. I still do. I don't go to depth because I do a lot of short-term trades. So I take picture if you've seen it. I take a screenshot that I mentioned. You take a screenshot of your chart if you use one, and I make notes on them. I want to know why I I was profitable and why did I miss the trade? Why did I lose in this trade? What mistakes did I make? And I make notes. And the more you do is that the habits, right? You build the habits, the easier it gets because it's a process. Trading is a process. Investing is a process. It's the knowledge that we acquire. And once you enter it, again, then you can write down the position size, the time of the day, the date of entry. And then during when you are in the trade, manage it. Write down actually the moments that you were really really wanted to get out of the trade, although it wasn't part of your plan. And put down your emotional process while you are in that position. It has a lot of value. It's again self-analysis, soul searching. Um, and then I go back and I say, what have I learned from the trade that after I exited? Did I maybe exit too soon? Did I should I have waited? Should I have my positions maybe more larger position or maybe smaller? Was I managing my um, account the correct way as far as the sizes go? Did I like to go scale in? Write down, was it a good plan, maybe scale in or scale out, go gradually in, gradually out? And did you follow your pre-entry plan? So these are important things that, again, make you a better trader and investor as well. So the last part I thought, I mean, if you like, there's a lot of psychology involved. We will do a class. I mean, that's a completely different class we need to do. Is Brett Steenberger. He's um, he's a psychologist, but he actually trades himself. So a lot of companies use him to help their traders. But I thought this uh, one-page analysis, it will be timely to look at yourself. The self-talk is very important. Please write down the self-talk that you tell yourself. The brain has a tendency to have an answer for everything that you ask. So the minute I ask, am I stupid? It will find 1,000 reasons that yes, I am. So make sure you ask the right questions from yourself. Don't put yourself down. Look in the mirror and look at the strength. And that's why in those trading journals, your past successes, write them down and know that you are successful, and all you're doing is you're paying the tuition if you lost. I've said it before, you're actually lending money to the market, and you are going to get that money back with much more interest on that. So this is a learning curve. It is not one time done. It's not supposed to be a home run. It's not supposed to be a hat trick. It's supposed to be a process. And once you do that, I think that will be a very successful journey. And just again, stick to your discipline and continue your journey with success. All right. Thank you, Sean. I think we can, that's the end of, and that's our website. That's the end of my presentation. And we can open up for questions and answers I want to make sure, we stay within time limits. Our classes, I like to make it about 40 minutes. So it's a little different than our Saturday classes, which are